Today, Apple stock gets a 9 count at a time when the fear and greed index drops below extreme greed, back into greedy territory, and Goldman Sachs is giving us a warning. We're going to talk about that and a whole lot more in today's video. Now, when we come over and look at how the indices fared across the board, the Dow was down 344 points. NASDAQ was up 50.45 points. S&P 500 down 10.69, Russell 2000 being down 3.56. Now, look at advancing issues versus declining. We had 75.2% of issues declining on the day. Then we come over and look at the sectors across the board. The only sector in the green was technology. The bigger laggard out there today was real estate, and a lot of that had to do with the 10-year yield continually to rise. Now, the yield not only going up, but look at the dollar index. Dollar index, a little rocket ship out there. We saw on Friday, dollar was down. Today, we totally reversed that course in the dollar index, up almost 0.5% on the session. We would think with the dollar index being so high that gold would have to come back lower, right? Not so quick. Yes, we did close a little bit lower than where we were, but at one point today, we saw gold up roughly 26 points on the session. However, this candle right now is not the most bullish looking candle. We look at the MACD indicator. We also have divergence setting up here, but wait, we still have the ABC pattern completion at 2782. Will we have enough to get up and out to that area, or do we see a little minor pullback, maybe right back down to where the previous all-time high was? Then we start to firm up, starting to make a run back towards all-time highs. We take a look at crude oil today. Crude oil today was up $1.18. But when we look at the candle, notice it's nothing more than an inside day. The high was lower than the high from the prior day. The low was higher than the low from the prior day, which means that tomorrow is likely going to be a breakout or breakdown from this pattern. Then we jump over and look at the fear gauge, the fear and greed index. Notice the VIX was up 2.11%. However, we zoom this out and we can see last night the VIX gaps up. Now we're getting into the gap. So will the VIX continue to decline and actually work its way all the way back down towards filling the gap? If the VIX continues to decline, that should be favorable for the equities market. However, Goldman Sachs just gave us a warning where they forecast S&P 500 returns of just 3% over the next decade after soaring about 13% during the last 10 years. And that kind of reminds me of this time going all the way back to when I started trading, where I did not see the markets making new all-time high. We get the big drop during the financial crisis, and then we finally made it back up and over to all-time highs. So are we going to be in for a period of time similar to this, as Goldman Sachs suggests? Because let's be honest with ourselves, we still have worries about deficit spending. All they do is spend. And at some point, this is going to be a problem for the market. And when we look at the interest rates out here, notice there's an 87% chance at the next FOMC meeting, the Fed will be cutting rates by 25 basis points. And we only have 16 days until the next FOMC meeting. Now, when we look at the yields out here, notice the yields steepening once again. The yield curve is on the rise once again. When this is going up higher, normally that is a problematic time out here for the stock market. We look over here at the Dow, as the Dow was very weak today. It was down 333 points. We only had a little bit of green here with Apple, Microsoft, Amazon, and then we had Boeing, since Boeing, basically has some type of settlement with their strike. But then we come over and we basically look at the NASDAQ composite index. And as we look at the heat map over here, what was really holding the NASDAQ up and the S&P was NVIDIA, up just over 4% on the session. We have a lot of red out there. So imagine if NVIDIA and Apple would have been down today. How bad would things have looked? And if we come over and look at NVIDIA stock smashing all-time highs, smashing out the ABC projections to the upside. So where is NVIDIA likely going to go next? MACD indicator still has a good separation of the lines. Then we come over and look at stocks like Tesla. Tesla, gap down, consolidation, breakdown. Gap down, consolidation. Now, is Tesla going to try to work up and fill the gap? Because let's not forget, later this week on Wednesday, Tesla's going to come out with earnings, but tomorrow we have some earnings coming out before the bell. We have Verizon, GM, 3M, GE, to name a few. And if we look at the expected movers, PCAR expected to be a big mover tomorrow. GM and 3M both expected to move right around 3%. But then on Wednesday after the bell, we're going to have Tesla with an expected move of 8%. On Thursday, what UPS has to say, or what their earnings had to say, could give us indications on, is the economy slowing, or has it been nothing more than fear mongering from everybody out there? Now I want to make everybody aware, Apex having an 80% sale off all their valuation accounts, passed in as little as 1 day, $85 activation fees. If you want to take advantage of this offer, use the link in the description box down below. Use promo code Mike at checkout. Now, when we look at the SPY out here on the daily chart, notice we still have this ABC pattern up here about 592. Then we have a secondary ABC pattern that should complete somewhere right up here around 600. Now, when we look at this, we can see we're starting to form a little consolidation up around this area. Are we about to see distribution on the way down? We look out here on the 4-hour chart, MACD indicator, basically flat line. We have this consolidation, but then when we dive down, we start looking at the 30-minute chart. Notice the MACD indicator has been hovering near the 0 line. If we look at today's price action, they slam it down, then they were able to bring it right back up. And if you look, it's hard to see, but this morning we actually gapped lower, we filled the gap, and then we came crushing on the way back down, only to start closing back up towards the end of the session. Now, if you notice, we are right near value area high, and we'll discuss that a little bit more in tomorrow morning's video. When we come over and we look at the S&P 500, we were talking about this during the live stream today, where we were spiking above value area high. Boom, we came all the way back down below value area low, and then we started to get the rotation back up. Now, on the rotation back up, we were only able to get back up towards the point of control. And when we look at the S&P 500, we had a lot of great trades play out for today. Now, when we look at the volume profile levels, value area high is going to come in at 5,900.75. We're going to have the point of control being at 5890.25, with value area low being about 5879.25. Now, if we start to get a pullback tonight, some of the areas we do want to focus on are going to be some of these minus development areas within the profile. Now, a real deep retracement back down would be all the way down here, and that's going to come in somewhere in the ballpark of 77.75 down here to about 76 or so. We have the next area, which is going to be right here about 93.75, which I'm going to drop a horizontal line across that, which we'll talk about tonight on the live stream. If you want to make sure you don't miss the next live stream, make sure you're subscribed and you have the bell notifications turned on for all. But today we're talking about this on the live stream as well. If you notice, right up in this area right here, this big drop that we had down also coincided with the 9 count right there. And if you guys want to learn more about the 9 count, you can look right up above in the cards and you'll see the video link there where I dropped that on Saturday talking about the 9 count. But look how perfect that was. 9 count, boom, drop on the way back down. We see the same thing on the NASDAQ as well. We got a little 9 count right here this afternoon, which we're talking about on the live streams today. Now, if we can get above value area high out here on the S&P, then I will be watching this minus development area right up in here. This will be a little target area for me, and that really comes in somewhere in the ballpark at about 59.09 up here to about 59.11. So we want to keep that on our plate. But again, I'm not going to be worried about that unless we can break down below 5,900. Then as we come over and we look at the QQQs real quick, what do we got going on there? We look at this on the daily chart. You can see this consolidation that has been built out. We see the MACD indicator basically flatlined out. We know Apple was one of the culprits really helping lift the NASDAQ in the S&P today. Now, when we come over and we look at the Qs, we also need to pay attention to what is going on with Apple. When we look at Apple, notice right here, we have a 9 count, similar to what I just showed you guys on the futures markets that we were talking about during the live stream, right? So do we form a consolidation up here or start to pull back? The 9 count basically is going to tell us there could be exhaustion in this market. And if Apple starts to give it up, watch out. That could be problematic for the Qs as well. When you see the Qs right now, only have a 1 count, so not a lot to see on that front. Then on the 4-hour chart, just kind of, meandering within the MACD indicator, not a whole lot to see. On the 30-minute chart, notice what we were able to do. We came all the way down today, closing the gap out here from last Friday. Then we came roaring on the way back up, and we actually closed in the upper third of the range. Notice we're also closing above value area high. If we can break out of this little consolidation right here, this multiple day balance area, then watch for the market to start waking its way back up towards about 497.75. Then as we dive down and we look at the futures markets on the 4-hour chart, notice we had a rotation down last night, meaning we're above value area high. We rotated a little bit lower. However, we never made it below value area low, and now we're back above 517.25. As long as we stay above it from a weekly perspective, we're looking for higher prices. But then when we couple that with the daily volume profile levels as well, notice value area high comes in at 20,512.00. Notice where we're closing. It appears we're going to close above that price point, which means that tomorrow or the following day, we are likely going to come back and test that level. Then we have the point of control down here at about 20,400. 453.50, with value area low being about 20,415.50. Now, one of the areas I would want to focus on, if we can start breaking value area high, this is going to be a little minus development area. I'll probably look to target tonight at about 20,500 down to about 20,496. So keep that area marked off on your chart. We can also make the case that we have an ABC pattern on the way up. And if we grab our Fibonacci extension tool, we measure the A to B leg, the B to C leg is a corrective leg, and that gives us a price completion at about 20,597. If we zoom that out a bit, where does that take us? Well, it's a little bit above that untested point of control at 628, but we also look left. That brings us right back near the highs from last Thursday where we had that push back down. So this makes sense that we could make it up and down, up towards that area. Now, where I would want to get bearish would be if we break value area high, and knowing me, I am probably going to look to target this area tonight, meaning value area high, or even tomorrow. So now today we really lacked any major economic news. We look out here for tomorrow, not a lot on the news docket. At 10 a.m. we have a Harker speaking. We had the Richmond Manufacturing Index. Then we come over and look on Wednesday. Not a whole lot on that front either. We have crude oil inventory numbers coming out, and we have existing home sales. On Thursday, we get a little bit more economic news. We can see that we have more FOMC members speaking. We start getting some PMI numbers coming out along with new home sales. Then on Friday, we get durable good orders coming out along with revised consumer sentiment and inflation expectations. So don't be surprised if we continue to chop. However, when we look out here on the Dow, we talked about this in the weekend video. We had two hammer candles. Boom, we get a confirmation of that pattern out here today. It's the weakest of all reversal patterns. And now, could we be on our way back down towards this swing point right over here at about 426.07, and maybe even down towards this high volume area on the composite profile? Looking at the small caps today, absolutely getting destroyed, filling the gap from last week, and we can see we're down roughly 1.57%. We have now been able to drop to the 38% retracement. Do we go a little bit lower, maybe down towards the 50 or 61.8 level? And then we'll see, do we start to firm up? If we break the 61.8, I'll be looking down here towards the 78.6. We breach that, we're gonna come back down, test this low, and more likely than not, start to go lower. Keep in mind, as we get closer to the elections, there's gonna be more uncertainty in the market, and we know the market does not like uncertainty out there. Now, if you guys would like to learn about the indicator that called the 1987 stock market crash along with the dot-com bubble burst, make sure to watch this video right here.